Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Monday, June 2nd, 2025. Today's episode starts with our headline, Metals Surge and Markets Brace for Jobs Data. We'll go over the metals in the charts in a little bit. Generally, today, nothing really happened in terms of news updates, and we're sort of just waiting for this very important jobs data coming out, starting with tomorrow with the job openings. If job openings, as seen on this Fred chart here, since 2022, March of 2022, if this continues to drop lower and lower and lower, well, that's not good for the economy. If they were to drop enough, you could expect stocks to drop and bonds to actually get a little bit of a bid. Then on Wednesday, we get the important ADP employment numbers, which are a great precursor to the Friday most important report in my book every month, the unemployment report. Just as a reminder, the Fed has a chart that shows when the unemployment rate spikes, that is the recession. That is when everyone's losing their job, when everybody says, I want work, and they can't get it. That is how we generally define a recession. And there's something called the SOM rule, which just triggered, well, not just triggered about a year ago now. And since then, we've been going flat. Are we continuing higher? Are we going to end up in a recession just the way that we have every single time the SOM rule has been triggered in the past? Or does everyone have all of the work they need, and is the unemployment rate going to start dropping from here? To my eye, this chart looks like a bit of a bottom to me in crawling to the upside. The data on Friday is very important. Don't forget, on Thursday, we also get that initial jobless claims. But all in all, by Friday, we should see whether or not Mr. Market is going to get bullish or bearish from this point. Either way, I believe Friday will be a pivotal day, because if unemployment isn't so bad, then markets are allowed to float higher. But if things are starting to look not so good, look out below. Next, community topics. What moves, if any, did you make today? Comment below. Robschild did nothing. I sat on my hands. We also have coming up, besides all of this jobs data, we have earnings of Dollar Tree and Five Below. These companies can act as bellwethers in terms of what's going on in the economy, considering they specialize in cheap consumer discretionary, cheap stuff that people don't really need. And as always, continuous tariff updates on a half-hourly basis at this point, and also federal budget updates. Thank you for watching, subscribing, commenting, and supporting. Support information in the description, subscription button right over here. No changes in the daily reminders macro views, fully explained in the website linked in my description. I will go over a little reminder today to go over best case bullish and bearish scenarios while we wait for the jobs data, and no changes to the crystal ball ratings or the Robschild portfolio for today. On to the charts, starting with the S&P 500, the SPX, going basically completely sideways. Like I said in the title, we're just bracing for the jobs data here. One strategy that might work in an environment and a time like this would be called a strangle, where you buy a call and a put, same strike price on the S&P 500, especially while volatility has lowered a little bit. I didn't get one myself, and it's certainly not advice, but this chart just certainly looks like we're winding up for bigger moves to come. But that's just me and my crystal ball. Moving on to the metals that I brought up at the beginning of the show. Copper currently 3.33% higher on the day. I have been talking about going back into this fight zone, and we did for 2 days, and we had quite a heck of a breakout to the upside. This usually involves what's going on in China. I believe I heard recently they came out with manufacturing data that seemed strong, and so that's what I think is giving some bullishness, especially to copper and to silver as well. Silver had a major move up today, almost 3%. Notably above this trend line here. Traders will be looking tomorrow to see if we can get a closing higher candle above today's candle, and then silver can move higher. And that's actually gold, not silver. Sorry about that. So I meant gold. That's what's going on in gold. Silver is not $3,381 an ounce. Silver did make a ginormous move up today, up 5.38%. This one as well. If we get a closing higher candle tomorrow, I'm hearing other traders talk about getting up to $38 an ounce. I said earlier in the show today how we're seeing things that are setting up for either a bullish or bearish case in stocks. The million-dollar question is, where is the 10-year break-even inflation rate headed? As it is right now, we're still well anchored here at 2.33%. But, you know, you look at the price of gold, especially compared to the tips market itself skyrocketing. These are supposed to move sort of in tandem with each other. When gold goes up, it means, yeah, hey, you know, we're pricing in inflation. And then the tips market is also supposed to go up saying, yes, we're seeing inflation here. We haven't seen this in the tips market at all since 2022. This has been staying just unbelievably flat. The bullish case for stocks to go up and everything else to go up would include the tips market getting a really big bid here. With these alligator jaws, the gold is the yellow line and the tips is the blue line. These alligator jaws shutting. One of these is wrong, or both of them are wrong, and gold needs to go down a little and tips needs to go up a little, or gold needs to just crash to the downside and tips can stay where it is. That's sort of what I see. This divergence can't last forever. One of these markets is wrong. Just to reiterate why I think it's gold that's wrong this time is, you know, taking a look at the 10-year minus 3 month, when below this black line, when we get an inversion in the yield curve and we uninvert, we go into a recession. When it goes negative, it means that the Fed is holding the Fed funds rate far above what the market expects in interest rates to be in reality. And they say, no, you know, we're trying to, they strangle it. It's strangling the economy. It's holding rates higher, saying, no, people, keep your money in cash. We want to slow down the economy. And then once they're done doing it, it happens. That's when we get our recession. We just went through the deepest, longest inversion basically of all time, and we're still sitting at zero here. This is screaming to me that there's a recession coming. This is not screaming to me that inflation is coming. The bull case relies on yields, longer yields actually continuing to rise here, along with copper being obscenely cheap compared to gold. We need to see copper go to the darn moon to chase gold higher. If gold is right here, we need to see a lot of things happen that we haven't seen yet. We need to see copper go to the moon. We also need real estate to go to the moon. It's never cost less gold for a house, hardly ever. The amount of gold that it costs for a home price, a real estate to gold ratio. So either home prices need to skyrocket, which, like, can anyone imagine that right now? Are we really headed into some, like, super bullish, like everything goes up mode? The one thing that's really holding me back from agreeing that that's a possibility, in addition to that, of course, that I bring up many times, is the home price to income ratio. How homes have never been more expensive for median household income. So then we also not only need to see copper go to the moon, real estate go to the moon, we also need to see wages go to the moon. We need to see wage growth be enormous to keep up with everything else. And if the music really is going to keep playing and everybody's going to be all honky-dory happy, the incomes need to go way up. And I'm not seeing that. I'm seeing cracks in the jobs market. We're seeing layoffs, or hearing companies talk about future layoffs because they're worried they're not going to be able to handle the tariff situation. But hey, maybe this week's data coming out, there'll be way more job openings, unemployment will be going down, initial jobless claims will be going down, and things are really honky-dory. We'll see what happens. My crystal ball tells me that it's this week that we see things really start to crack apart, but what do I know? I'm just a guy with a crystal ball, and that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.